Back with Indian Open right here on Bloomberg Quint. Bombay Dyeing has reported a weak quarter on all parameters. Net loss for the company widened to more than 90 crores in Q1. However, it was the real estate business that was worst hit, with revenues falling quite significantly, as much as 95%. So what were the factors at play? Was it genuine low demand, or was it accounting norms change that led to this? And what could the plan be going ahead for the next 3 quarters as well as for the next year as well? Let's touch base with Vishnu Sundararajan Peruemba. He's the Chief Financial Officer at Bombay Dyeing, with his thoughts on what could happen in the quarters ahead. Vishnu, so good having you. Thanks so much for joining in. You know, I was a bit surprised. Your realty revenues in FY18 were up 130%. Suddenly, the first quarter sees a nosedive. What happened? Is it that demand was genuinely so low, or has it got to do with accounting norms changed?
Yeah. Good morning, Neeraj, and good morning, viewers. I would like to answer this in 3 parts. The first one is on the face of it, the revenues and the profits which have been reported as highlighted was around about 96 crores of loss. However, would like to clarify that this has been largely driven due to a change in the accounting policy. And had we continued to account the same way as what it had been in the last year, we would have reported, in fact, a profit of 56 crores, which is against a backdrop of 32 crores of last year, which would have been a staggering growth of 300% plus. This, if you break it down further, getting into the details, the MCA has enacted the new standards for accounting for real estate revenues. So, as per the standard, which is INDAS 115, the revenues, it has radically changed the way the revenue is recognized in real estate industry. Earlier, it used to be on the progression, which is on the percentage of completion method, which has now been changed into in terms of the revenue to be recognized only upon transferring of control, which is on achieving OC and offering possession to the customers. This in turn has led to, in terms of us not reporting any revenue on the project side for the quarter in terms of the real estate. If you go into the segment level reporting that we have done, you would clearly see in terms of real estate as a revenue, we have reported around about 11 crores, which is largely the lease rental income that we get. And against a backdrop of as the 238 crores of revenue which is booked in last quarter the same year. So against that, had we booked the project revenue, our revenues would have been on real estate reported as 265 crores, which would have been 10% higher than that of the last year on year. Same is the case in case of the profits. We have reported in terms of real estate piddly 1 crore as the revenue, the profit for the quarter. Had we accounted the complete revenues of projects as it used to be in the past, we would have reported a revenue profit of 152 crores for real estate, which in turn is what is reflecting in the final profits that we are showing.
Right.
Against a loss that we have 96 crores. If we add up this 152 crores, we would have reported actual profit of 56 crores, which is again against a backdrop of 30
Vishnu,
crores which we reported last year the same quarter.
Right.
We would have gained 300% in terms of profits. Yes.
So this will show up at some point of time, right?
Yeah.
For the year as a whole.
Further to that, I would. Yeah. So that takes me to the second part of the response to the question, which is consequent to this application of this accounting. There is the complete revenues and profits which we have booked until 31st of March 2018 of 1,773 crores stands to get reversed against the opening balance of our retained earnings as a transitional reserve. This so-called transitional reserve, that's the reason it's called as transitional reserve. The moment we get our occupation certificate and offer the possession to the customers, all of these revenues and profits which have been reversed will get reinstated back into the books, which in turn will ensure that the retained earnings stand back into the same position. So it's just a question of timing in terms of recognition of revenue, which is leading in terms of this results being shown as a negative, while the fundamentals of the business have been extremely good. We have been growing in terms of revenue by 10% and in terms of profit substantially, as I said, of almost 300% plus.
Okay,
so we are seeing
and you think that will continue, Vishnu?
Yeah.
You think that will continue? I mean, what people would want to know, I presume, is that one, whether the recognition that you spoke about, will it happen in FY18?
Yeah.
Do you have visibility there? And two, one is the accounting bit. Two is how the growth is. You mentioned 10% on the top line, 300% on the bottom line. Can the same pace be expected for the remaining quarters?
In all likelihood, that's where we are expecting the occupation certificate to be obtained in Q3, and we would be offering the possession to the customers in Q3. And at that point of time, we would recognize on an annualized basis. Definitely, we will be seeing that kind of a growth as we close down to third quarter and the fourth quarter of this year. So the only thing, there wouldn't be any revenues for real estate which we will be booking till we obtain the occupation certificate and offer possession. Okay. So which is one. So quarter one and quarter two might look dragged, but you will see the reflection of all these things coming out in quarter three and quarter four. We look upon the year to be a substantial growth, both in terms of the top line and in terms of the bottom line. Consequent to this, as we are offering possession with Q3, we would be getting a substantial billing to be done and a huge amount of collections, which would help in terms of substantially reducing our debt burden, which currently is at around about 2,900 crores, going down to almost around about 1,900 crores by the end of the year, which should in turn reflect in terms of substantial reduction in the financial cost and bottom line further accruing in the coming years.
Okay. Fair call. Slightly short on time. We'll just do a bit of a rapid fire. I presume that the current assets at the end of March 31st, 2018, which was about 1,512 crores, if I'm not wrong, which were unbilled revenues, not due, and projects were expected to be complete in FY19, those would get recognized in quarter 3 and quarter 4 as well. Does that include what you just said?
So we had, if you talk of it in terms of revenue, yes, there was an unbilled revenue of 1,500 crores, which will automatically get due for billing once we obtain the occupation certificate, and we would be billing it, and all this would get reinstated back.
Okay. You've done, just one small question, Vishnu. You've done a fair bit of debt restructuring. I believe all your bank loans, term loans were paid off. You've taken loans from NBFCs like Diwan Housing. Are these on much more flexible and better terms financially as well?
Absolutely, yes. We had done a substantial restructuring in terms of our debt portion from 23 banks spread across. In terms of the debt, we consolidated into almost around about 4 banks, and part of it is one or two NBFCs. So, which is also done, which is reflective in terms of the results that we had published in the annual report. Our debts are now restructured, and they have a deferred portion, which basically most of these would be due for payment only starting 1920. So we have no stress in terms of it, but however we would look at in terms of going ahead and prepaying those debts earlier than what is due.
Okay. Alok Banerjee is on
that 2,500 crores, only 400 crores is current debt. Yep.
Okay, I get that picture. Yes. Now, Alok Banerjee is on record saying that you would nudge the 500 crore mark on the retail and the textile division by FY20. You've done about 50 crores this quarter. Are we to presume that the next 3 quarters will see substantial growth for you to nudge that 250 odd crore mark that you would probably hope for?
Yeah, very much. So we reported in terms of retail 250 crores in the last year. We are hopeful in terms of, and we are going ahead with a lot of new products, new categories to flow in. We are already into curtains and then into ready-made garments. And we hope to forge in more categories, which would help in terms of us to drive the top line to 350 crores in the current year and then move it into 500 crores in 2020. So we are almost there on the plan.
Okay. Well, running slightly out of time. Vishnu, it was a pleasure talking to you, but look forward to have a slightly detailed discussion a bit later on in the month or the next month. But thanks so much for joining in today and giving us a perspective.
Thank you. Thank you, Neeraj.
That's Bombay Dyeing, sounding confident about how the year ahead could look like. So that's about the numbers of Bombay Dyeing. We will be back with the conversation with Minda INDAS.